Welcome to Black Rose's Global Macroeconomic Updates, Macroscope, July 17th, 2025, United States. Consumers keep spending, manufacturing rebounds sharply. Retail data blew past expectations. Headline retail sales rose 0.6% month over month, well above the 0.1% forecast. The control group, which feeds into GDP, climbed 0.5%, beating the 0.3% expectation. Even retail sales ex-autos showed solid growth of 0.5%. This marks a sharp turnaround from June's slump and hints at resilient consumer demand, even as rates remain elevated. On the manufacturing front, the Philadelphia Fed Manufacturing Index surged to 15.9, smashing expectations of a negative print. Just last month, the index sat at -4, so this is a strong signal that regional factory activity is gaining momentum again. Housing and inventories, steady but subdued elsewhere. The NAHB Housing Market Index came in at 33, unchanged from the forecast, but a point higher than last month. It's still in contraction territory, but builders seem cautiously optimistic. Business inventories were flat month over month, right in line with expectations, suggesting companies are managing stock levels carefully amid mixed economic signals. Inflation and trade prices, a gradual climb. On the price front, US import prices rose 0.1% in June, below the 0.3% forecast, while export prices jumped 0.5%, reversing the previous month's 0.6% drop. These figures may suggest early signs of price pressure in trade channels, but nothing alarming yet. Labour market, jobless claims. Drop in the labour market, initial jobless claims fell to 221,000, better than the expected 235,000, and below last week's 228,000. It's another sign that layoffs remain low and the job market remains historically tight. Asia. Japan's trade picture improves. We kick off in Japan, where trade data brought a surprising shift. The Japanese balance of trade swung back into the black with a 153.1 billion yen surplus, handily beating last month's 638.6 billion yen deficit, but still falling short of the 353.9 billion yen forecast. Exports fell 0.5% year over year, missing expectations of a 0.5% rise, but still showing a modest recovery from the 1.7% decline last month. The improvement in trade may reflect easing global logistics and a softer yen, but the weak export growth shows international demand remains fragile. Moving to the UK, today's labour data was a mixed bag. Employment rose by 134,000, nearly triple the forecast of 46,000, suggesting continued strength in hiring. However, the unemployment rate ticked up slightly to 4.7%, above the expected 4.6%. On the earnings front, average wages including bonuses grew 5% year over year, matching the prior month, but failing to cool further. With the Bank of England still watching wage growth closely, this could keep rate cut hopes at bay for now. Watch our next video to see what is going on in the world with macroeconomics.